The results are in from the World Gold Council's annual survey of central banks. There are two big takeaways. Central banks expect gold's share of reserves to keep rising, and they expect the dollar share of reserves to continue falling. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe, and we'll keep you in the know. It turns out that having the ability to print money at will might not solve all your problems. Just ask the world's central banks. Many of them have apparently decided that stocking up on precious metals might be the key to defending their reserves against economic, fiscal, and geopolitical uncertainties. In fact, central banks have been net purchasers of gold every year since the financial crisis. And since 2022, central bank gold demand has been at or near record levels. But all this vigorous gold buying doesn't mean central banks have had their fill of the yellow metal. In fact, according to the World Gold Council's 2024 Central Bank Gold Reserve Survey, the gold consumption by central banks may have only just begun. Among the compelling pieces of data that emerged from this year's survey is that more than 4 in 5 central banks expect overall gold reserves to increase over the next 12 months. That's the highest percentage of central banks to say this since the question was first asked in 2019. Extraordinary market pressure, unprecedented economic uncertainty, and political upheavals around the world have kept gold front of mind for central banks. And it's not just the near term over which central banks expect gold's share of global reserves to expand. According to the survey results, 69% of central banks see that share rising over the next 5 years as well. So why are central banks buying all this gold? In a nutshell, risk mitigation. The number one reason cited by central banks for buying gold is its capacity to serve as a long-term store of value and inflation hedge. 88% of central banks identified that as a factor in deciding to own gold. Next is gold's performance during times of crisis. That was identified by 82% of central banks as a factor in choosing to own gold. Third on the list is gold's potential as an effective portfolio diversifier, which was named by 75% of central banks. The World Gold Council's global head of central banks said, "While influences like price may temporarily slow down purchases in the near term, the broader trend remains in place, as managers recognize gold's role as a strategic asset in the face of ongoing uncertainty." But central banks' expectation that gold reserves will continue to climb is only one standout from this year's survey. Another is where they see the dollar headed. 62% of central banks think the dollar's share of total reserves will be smaller 5 years from now. This includes a majority of central banks representing advanced economies, a fact that took even the World Gold Council by surprise. It is notable that the percentage of advanced economy respondents who believe that the U.S. dollar's share of global reserves will fall has increased from 46% in 2023 to 56% in 2024, reflecting increased pessimism even among advanced economy respondents about the U.S. dollar's future share of global reserves. Put another way, this is how the majority of both emerging markets and advanced economy central banks see the future. More uncertainty, more gold, fewer dollars. We know how they are preparing. The question is, how will we prepare? That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.